Hello everyone, good morning. It's Crypto Cowboy. It's past 11 o'clock here Chicago time. We are on the 11th of April coming to YouTube here with another edition of Bitcoin Technical Update. And let's start with Bitcoin, and we'll take a look at the S&P 500 as well today for a little bit. So since we've spoken last week, Bitcoin has been in a pretty tight range without major moves in here, but things are starting to shape up here slowly. And longer term direction, things are still a little bit unclear, so we just kind of have to take a look inside the structures and see how we can take advantage of some of these moves. But I'll take you basically through my counts to see where we stand, and then I'll show you a little bit of an insight look also into a couple of the trades we took into the room, and kind of how we're looking at the moves kind of going forward. And I've introduced this red count a couple of days ago, and just to kind of give me an opportunity here to make sense of this advance from these highs, and we can from the lows, and we can there's a couple of interpretations where this could be valid, and this is one that could be a bullish interpretation here. So basically what we're having a move up into a wave one, which is nice and impulsive up here. You have a second wave up here, you have a third 1, 2, 3, 4, 5, you have a pullback in 4 here, and then you do a 5 wave up in 5 to complete a 1, and this is called a leading diagonal, where by the rules of the leading diagonals, each consecutive wave needs to be smaller than the previous wave. So in this example, this wave 3 has to be smaller than 1, and now we are through this couple of spikes up here, we are just making slight new highs. The highs are not made on a closing basis. So like I've said in the room into my daily presentations to our members, I'm going to accept this for right now just because of the way this whole structure looks. So I'm not going to get tied up into necessarily saying that we're breaking the rules up here to this third wave. The wave 5, it's fine, it's smaller than 3. Wave 4 is smaller than wave 2. So in terms of the overall look, I think it makes sense. Now if this is a wave 1 up, that means that we're obviously going to embark in a new bull trend into Bitcoin, and especially after leading diagonal, the moves should be pretty impulsive to the top side. And either way, near term here, we still have to get a second wave pullback. Now, this to be just a second wave, it's very small. If you look at this advance here, it's pretty large. I mean, it took from March 12th to, April 12th, so you're looking, almost a month up here. So you can expect this, second wave pullback to just last 1 week or a few days. So we're looking to this as just being the initial decline into this first wave A, and then get a B wave, and then possibly a C. We got to retrace at least with 38% for a second wave. Ideally, you want to get anywhere between 50 and 61% for a second wave pullback, which means that we would get, in case this shapes up as being a zigzag, you'll get an A, you'll get a B, and you get a C. You could get a flat. Also, that can take several shapes, but the main idea remains into this red count that we should be pulling back here towards 5,500 as this move, kind of exhausts itself. And if it's corrective in nature, more than likely we will qualify it as a second wave. If the move starts to get aggressive to the downside and start to look more impulsive, then this A wave becomes a wave 1, this B wave becomes a wave 2, and we're breaking lower, then we're going to dismiss this possibility and move to the next count. Now, in terms of trading, there are opportunities here, and I'll show you. There are opportunities to trade because if you have an impulsive leg, you got to know, which legs of the structure you wanted to trade and you want to get involved with, and that can give you kind of opportunities during the day, for a 2-3 day trade, or maybe for a day trade, to kind of take advantage of the inside moves. Okay, so if I go now to the pink count, this one, it's also a bullish count, but on this one you can notice that the leading diagonal here kind of stops here. It's a 1, 2, 3, 4, 5 for 1. You're doing a 2, and now we're having another 1, 2. Okay, so when you look at this, you can count 1, 2, 3, 4, and 5 for a wave 1 of a smaller degree. Wave 2 is smaller than wave 2 here, so we're not breaking any rules out here. And now we're looking for a strong break up here to a third wave of 4 and a 5 to complete 3, then 4 and 5 for a larger wave 1, which will be just the initial advance into the longer term move in Bitcoin above 20,000. I'm starting to have issues with this count because if you look up here, this ABC, we can count it as an ABC. I can go to a smaller time frames, and you can look at this as being let me just even go to a 1 hour, right? You can look at this as being, okay, you have a 3-wave up here in B, you have an A triangle B or a 3-wave up in B, and then you can go in a 1, 2, 3, 4, 5 and done. Now, if this is the correct interpretation, we gotta, as I was telling my members, we gotta get up here and start to move up here aggressively and start to create a 5-wave move up impulsively. And until we start to pass the 7400, I am not interested in any bullish outlook just yet. So 1, 2, 3, 4, 5, try to get above here and then possibly buy an ABC pullback for a breakout. Until then, I'm cautious because I'm not too happy with the way this kind of shapes up here at this level. It's a valid interpretation. And, you know, we did pull back up here. Let me see what's a wave 2 if I have a measurement. We pulled back into the 38%. So if we wanted to grow, you know, go down even a little bit lower, but if you can see C versus A in the zigzag, we are at about a 161.8 multiple of wave A, which is kind of the maximum what I would like to see on a zigzag. If you go to a 261.8, it's already starts to look more as a third wave and not as a C wave. Okay, so this is on this pink count. Now let me take you to our yellow interpretation, which says, if you remember last week's video, which says that we are in a more of a major sideways triangles where this is an A, B, C, D, and E for the fourth wave, and then we're about to break up higher. So this one gives Bitcoin time on the clock, possibly towards the end of the year, maybe beginning of the next year, before, you know, we're squeezing out into this converging trend lines and we can consider the move complete. And until then, we're going to be through a world of pain, through kind of inside moves in here, you know, that are going to be kind of choppy. So if I go from a 2-day to a 6-hour chart, this, instead of being a leading diagonal, we're looking at it as being an ABC for a W. We have a triangle in X and then another ABC up to complete a wave Y. If this move is complete, and I'm going to take you to a 3-hour chart. If this move is complete as a part of a wave Y, then we're looking, and part of a wave A, then we're looking to do a B down. And that B needs to also be in 3 waves, being a WXY or being an ABC. The move needs to progress in 3 waves to do the next leg B of the larger D of the triangle. Okay, which means that this first part has to be impulsive, which means this is a 1, a 2, a 3, a 4, and a 5 for A. So if you can see what I'm doing, you can combine several count interpretations to give you a direction and see which counts are you know, likely to perform and where you can protect yourself and get out of the trade, or how much advantage can you take off a trade, because you don't want to be overly optimistic bearish or overly optimistic bullish when you can see there's stuff in the way, and then you either get stuck, you know, with the break-even trade or maybe even with the losing trade if you're not, you know, let's say humble enough to know that, you know, you don't want to ask too much from a move. And be able to get out and re-enter later instead of thinking everything is bullish or everything is bearish. So we're trying to take advantage of some of these shorter term moves. Now, if this in the yellow count, if the move to the downside is complete, it could become very bearish. I mean, the move to the top side is complete. We got very bearish because this could be a wave 1 and this could be a wave 2, as I'm showing you in our silver count. Okay, and this count is the most bearish one that I have, where we're going, and this being a wave 1 down, and a longer term on a 4-day chart, you're looking at this being a 1. This is a 2, 3, 4, and 5. So if you kind of combine silver and yellow, I'm not sure what color you get, but jokes aside, we could be on a wave 2 completion. I would have to take this wave 2, move it down here, call it complete, as I show you up here on the yellow, and then look for the progression down. Okay, and then this is, you know, that would mean that market is actually about to turn very, very bearish. Now, if this silver count still survives as a second wave and we're deciding to correct a little bit more high, then we got to count this as a W in an ABC. You have another ABC for X, excuse me, and then you do in an A, 5-way move up. You were correcting down in B, maybe towards the 618 at about 6,400. One more up in C for Y of 2, and then we're going to sell off. Okay, so I know things are maybe somewhat confusing, especially if you're not very familiar with the Elliott wave structure. That's why, you know, I invite you to take a look at my course. I don't want it to sound like a sales pitch, but this way you can, you know, get much, much closer to the way I'm thinking. I'm looking at the counts. If you don't want to get the course, you can come into our room and just learn a lot over there through my daily video updates, through my daily charts and commentary and discussions into the room about certain interpretations and how we can take advantage. Okay, I think this is important because markets are not always trending. So we gotta, if you wanted to be able to be profitable, we gotta be able to take advantage of some of these internal moves into the market and see which leg you wanted to trade. So for example, I'll take you into the room and I'll show you what we chose to trade up here this past week. And one of the trades was a short opportunity. So we were looking at this as a possibility of entering short. I've set BTC trade alert, opening shorts at market at stops at 73.35, and I follow up with the chart. So we were looking at this kind of consolidation up into these levels and looking at the possible breakout to take a long trade. That breakout didn't happen, and instead we've gotten a breakout down. And we were watching this swing low down here for a break below it. That would be a confirmation that the market is about to turn bearish. Automatically, we enter at the market with 25% of a full position. We placed the stops above the swing's highs just in case the market would turn to protect our capital. And then we looked lower. The market actually pulled back a little bit, so we were able to add another 25%. So I've entered with a 50% of a full position, and we were looking for these profits down into the 67.15 area. Okay, and then, we were kind of monitoring the wave counts coming lower. And then, I kind of told our members, hey, I'm adding a sell on a 25% here. And then the market broke lower. Now, I've gotten out of the trade a little prematurely. We've gotten a bit of a swing down here. And, I kind of was at fault for thinking that wave 5 could be complete. And I've gotten out of the trade. But the market, it was, there were nice profits. But the market eventually came much lower, very close to our target here at about 67.15, and I kind of presented a video on here about the whole thing and where we are. You can see kind of the following counts and the updates kind of following my trade up there. So this is one of the things that you're getting if you're coming into the room. All right, let's take a look at the S&P 500 as well. I promised you guys that I was going to take a look at this structure too, and basically longer term here, we're looking for, this is one of the counts where we're looking for one more high into the S&P 500 before we are reaching actually a major high into the markets. And there's no way of really telling how high this would go. You could kind of look at it as being maybe 100% of this wave 1, or a possible 38 or 61% multiple of this wave 1. But the idea here is that we're actually into some kind of expanded flat, and if that's the case, we should aggressively just take out these highs and move up higher. The other count that's a little bit more bearish says that we're actually finished into this super cycle degree, and we're actually moving much lower into the markets. And the way we're looking at this is a 4. You go to a 1 month chart, is a 3, a 4, and we're reaching a 5 through a 1, 2, 3, 4, and 5. I'm going to take it to a 2-week chart, and then this is a WXY to complete WXY here in a triangle, and then we're completing this 5th wave in March, February 15, February 18, when we reach the top. So since then we've pulled down in a wave 1. Now we're doing actually a wave 2, and we're looking at the next major decline into the stock market, which should come here, fairly shortly after this wave 2 is complete. We've done A, so 1, 2, 3, 4, 5 for 1. We've done an A leg, we've done a B, and we're in the process of building this C leg to the top side, which can come close to this 2800, 2900. If you want to pass a little bit above the 618, it's fine. Anything above the 786 starts to be problematic, and especially for getting above the swing high in wave 2 at about 31.28. Then the markets are more than likely going to break to new highs in here. So we are looking at an opportunity to short here with our members as well, to see how we can read an end to the C wave, and then we got to look for a confirmation. Remember, we don't just trade on hinges. We wanted to see a little bit of a confirmation happening from the market as the market is turning, and then you have a good place to put your stops and also enjoy the market lower. So for me, a first indication would be a break below this 26.25. Until then, we still have to be cautious. This move could still be in progress, so I could take the C wave and just kind of go with it a little bit higher in here. This could still be part of a wave. Don't want to mess with the labels much, but this could be a wave 4. This could be still a part of a wave 3, and then this is maybe another 1, 2, 3, 4, 5, maybe complete, or maybe a few more swings in here to complete a second wave for this second, to complete the C of 5 of second. All right, so this is what I have, guys, for today. I hope you enjoyed the video. Please, if you like it, don't forget, it's important for me that you hit the thumbs up button. Maybe leave some comments, or criticism, or if you like it, what you like, what you don't like, what would you like me to take a look at, and I'll be happy to do it. Again, visit us into the room. If you want to trade with us professionally, you can come into our room and join our service. You can take a trial for a couple of weeks and see how you like it. But there's a lot of good information out there, and I guarantee you will become a better trader for it. All right, so thank you so much for watching, and I'll see you guys on the next video update. Bye-bye.